Hey, this is Kent Philly. Thanks so much for coming back to the Stake Rocket Pool channel. Today is March 28th, and I'm excited to share a Stake Your Ethereum with Rocket Pool DIY guide that my team and I have built. So I'm going to walk through the guide, and we're a lot of information in here to go through to determine how you'd like to stake your Ethereum. And at ETH Denver was talking with a large institutional investor who is looking for a business case template for why to stake with Rocket Pool versus just being a individual solo node operator. I am both a solo node operator and a Rocket Pool node operator. And so I thought it'd be a good opportunity to build on a couple guides that were out there today on the Ethereum staking rate, estimated returns ahead, as well as a Rocket Pool return on investment and valuation model. So combining the two and adding a bit more into it as to be a DIY guide, I'm excited here to share it with you. So without further ado, let me zoom in and go over our stake Ethereum with Rocket Pool DIY guide. So excited to give shout outs to the teams that helped inspire the creation of this. But let's just start off at the top with the introduction. And so this is a guide that you'll be able to copy and edit and hopefully be able to improve upon. What we're doing here is first going through what is in this first sheet, which is Ethereum staking with Rocket Pool. Then we also have a separate tab that goes into Ethereum liquid staking tokens or liquid staking derivatives, spectrum of decentralization, and highlighting the different competitors in the space today and some trade-offs. But jumping into the DIY model here, first, we're going to start off with tokenomics and staking. So Ethereum's proof of stake model, we go into detail leveraging John Charbonneau of DBA Capital's Ethereum model. And then we jump into a Rocket Pool model. You see here that we have Ethereum at the top because you have to use, 80% of your assets would be Ethereum when you're running a Rocket Pool Ethereum node. And then you would have, anywhere between 10 to up to 150% of your collateral would be in RPL tokens to then earn the reward that you can by putting that collateral down to create the RETH liquid staking derivative that's available in DeFi. So we're breaking down the tokenomics and how staking works. Then we're going into different staking options. Diving into Rocket Pool's options, what's exciting is that Rocket Pool ahead has the 8 ETH node opportunity so that you don't need to have 16 ETH anymore to run a solo validator in the Rocket Pool community. You'll just need 8 ETH as well as 2.4 ETH of RPL. That's the collateral for the RETH that's created on the open market. Pardon me, I had to cough. So jumping into it, like the main output of this model is to see how much you can earn via staking a node with Rocket Pool today. And so it's easy to highlight summary statistics here. And these statistics are estimates. And I was actually told that the Ethereum staking rate is higher depending on how you're staking. And it definitely is for me as well, because there's a lot of considerations based on the consensus layer rewards and then the execution layer. Those are the MEV rewards or priority fee rewards. Then you also have, your RPL rewards, and then denominating that back into Ethereum, you have to consider the RPL ETH price. So to get to one summarized rate of return, there's a lot that goes into the calculation. And so I'll walk you through that. But the snapshot here is that you can earn more today by staking with Rocket Pool than you could by yourself. And so a quick reference that we can highlight that is an example in our guide is Rocket Pool's own documentation. and highlighting what you can earn as a node operator. Now, it took me some time to understand this, but they provide to you calculators here that you can input the current metrics in the ecosystem. So I just checked, and there are about 17.9 million ETH staked. How did I figure that out? I went to a Dune Analytics dashboard, found the most recent dashboard. This is by Hildeby, and we can see 17.979 thousand 369 ETH have been staked. And you come up with some other estimates based on how much you're going to charge your commission, and then key pieces would be priority fees and MEV estimates. And with all of that, then you can come up with a estimated return that you'd get for staking with Rocketpool. So I have a low estimate here of 5.27% when the common Ethereum rate of return is 4.16%. So being able to increase your yield in Ethereum terms is huge for long-term investors who are also looking for capital efficient ways to provide infrastructure and get in. And so without further ado, let's go further down into our model and just jump right into the tokenomics and staking of Ethereum. So John Charbonneau, my apologies if I screwed up your name, John, but he has a fantastic model that was used as the backbone for my model. And I've highlighted it here in the documentation, but he has a very technical perspective on how to, first highlight how Ethereum works with its issuance model, the current supply and tokenomics, being able to see the rate of return based on how much Ethereum is staked. And then he even puts in, estimates based on how much usage there is and with different upgrades planned ahead. So this is like quite comprehensive analysis considering future roadmap items that Ethereum is planning to do but aren't in the near roadmap. And so this was an exciting model that helped me, add in this key information here. So we can see where we're at today. There's actually, I need to highlight this, 17.9 million Ethereum staked and not 16 million. And the base fee that Ethereum will pay based on the current amount of Ethereum staked is only about 4%. And it will continue to go down as more Ethereum is staked. And you can see that in this model as we go all the way over to see what it would be like if 120 million of Ethereum were staked. And that would be closer to the total circulating supply, which isn't very likely. We currently are sitting around 16% of the total supply of Ethereum staked. We're expecting that to likely double or triple after the latest upgrade of Shanghai, when individuals will be able to unlock their Ethereum that they have locked up. So didn't want to bore you with much there, but this is the complex model on how Ethereum works. Compliments to John for providing that. Now, jumping in the fun of the Rocketpool community, Marceau has a really fantastic model for how to value Ethereum, as well as he is the creator of the spectrum of decentralization. I added in the LSTs, liquid staking tokens, because some people are not into using LSD, liquid staking derivatives, which I'm a big fan of. But here we have Marceau's RPL valuation model. He's also added some more fun stuff to the bottom here, but basically he highlights that because of RPL's mechanism as a collateral asset for the creation of the RETH liquid staking tokens that are available in DeFi, and the denomination of ETH collateral in the units of ETH, it's possible to project an RPL value using a few simple inputs. So he's hoping for feedback from the community, and so are we, but I think he did a really good job of saying, here are his assumptions on where we could be based on how much RPL is staked, and then the market share, more importantly, of Rocketpool comparative to other liquid staking derivative tokens, liquid staking tokens, tokens and projects that are helping Ethereum be staked, but also then using it as collateral in DeFi. So, Marceau also has some interesting different variables based on ETH collateral per validator. We're going to be heading towards 8 ETH as the minimum. One day Rocket Pool could get down to 4, but there are some risks there and losing fees in the MEV pool. So moving to 8 ETH instead of directly to 4 makes a lot of sense by taking less risk. But Marceau's model here is very helpful, and what we used in our model to figure out, the key elements that you should consider with Rocket Pool. So we highlight that here in the beginning, like the percentage of RPL staked, the amount of RETH in supply. So that's the amount of total liquidity that the Rocket Pool community has created, and then even the average collateralization of each Rocket Pool node. So I have links inside of here. There's some really good resources that are available through this link. You can come to rocketscan.io to see all different types of real-time stats where we pulled this from. Actually, there are now 18,000 hodlers, or hopefully all diamond hands of RPL. And you can see all different types of interesting, facts and insights about the Rocket Pool community. A big one that I use regularly, would be the RETH to ETH Oracle price, as well as, the RPL to ETH price. That's quite important. When we were looking at Marceau's model, you can see that, from where we are today, which is actually a bit low, it's not at 0.04 ETH, it's actually 0.058 and likely going up 10.6% today. That's exciting. That there's still a long ways of upside to go for the RPL token if we're going to get to the base case in Marceau's view of where Ethereum staking could go with Rocket Pool, and this would be 186% growth from where we are today. So that leaves a lot of upside for Rocket Pool potential. And as you go through how that actually would work and know that this isn't just smoke and mirrors, you would dive further into the model that we have here. So we're going to zoom a bit out. Hopefully that's not too bad for you at 110, and show that where we are today with Rocket Pool is what we have manually highlighted from March 12th. So I know that today's the 28th. This initial analysis was created on March 12th, and we've added additional things since then, but we have not yet updated these statistics. So we're providing where we're getting the information for the amount of RETH created, the amount of ETH that's been staked, the average RPL collateralization per mini pool validator, how many mini pools have been created, how many node operators. This is old. On March 12th, there were 2,179. Whoops. And now we can see that there are, I think, 2,224 node operators. So the community keeps growing steadily because it's permissionless. And so more and more individuals know that using Rocket Pool is a fantastic way to stake your Ethereum, provide infrastructure, and have upside in Ethereum. So more on Rocket Pool, we're highlighting in the tokenomics that are summarized. And there's the total supply. Now this again is from March 12th, so a bit outdated, but the percentage that's staked versus effectively staked. And the fun stuff here is just jumping right down into, shrink this image a bit more, like RPL staking rewards. And so we highlighted this again in the Rocket Pool node operators, where we're just breaking this down to show you that you can earn 7% in ETH, which is a lot more than you can earn anywhere else, as well as 8.4% or more, likely less as more RPL is staked, but dual rewards that you're going to be able to earn by being a Rocket Pool node operator. So we highlight that there and how we came about it. Now the last section, second to last section here would be like the Ethereum staking options. So a lot of people, once they do their research, once they've gone beyond just staking in a centralized exchange, will think about being a solo staker. So you need hardware, you need the assets, and then you need also the maintenance, you need support. And so what I have here are the guides for Rocket Pool, which are not the guides for how to get your own ETH2 node. There are lots of options available on how to self-host an ETH2 node. You could use something like a Raspberry Pi, or you can use a virtual service as an externally hosted provider. But the baseline is that you need to be able to have the hardware, and then you need to have 32 Ethereum, which at today's rate is about, one moment, please, $57,000. And then you need to be able to prepare for upgrades and maintenance schedules so you don't lose out on your validator rewards, or even worst case, get slashed. So we can see there's a base rate here that's calculated from John Charbonneau's model. Now, fun part, jumping into Rocket Pool, you need the same type of things. You need the hardware, the assets, and you need a maintenance schedule. And like the good news is that, Rocket Pool has really good docs for figuring out what hardware you want to do, different models and examples. We're hoping to create a model and show you how we set up our home staking node. We're currently doing some remote staking in 3 different geographies because we're not able to keep that same uptime. But the exciting thing here as I move on are like example setups. So there's tons of resources in the community for how you can stake your own Rocket Pool node with real examples provided in our document. You can also go to Reddit, see pre-configured suggestions, and a lot of people that I've talked to like all nodes if you're just looking for that externally hosted option. Now going down a bit further, we highlighted this above here in the RPL staking rewards. We have it again. So the ETH APY today and the RPL APY. So you're earning in 2 different tokens because your Ethereum is staked, and then your RPL is providing that collateral for the RETH that's being created in the market. Now, getting to your calculation for how you get your net returns in Ethereum, let's first assume that you have 16 ETH staked with Rocket Pool and 1.6 RPL to ETH, which is the minimum amount, which is about 10%. And most have, a lot more than that stake today. But we are taking the total validator returns at the current rate, and then, being able to take what we have below, which is your ETH rewards based on your 16 ETH that you have staked, and then your RPL rewards based on your 1.6 RPL of ETH at the RPL staking rate, and then denominated back in ETH at the current Ethereum or RPL to ETH rate. So you can see that calculation up here, and that then gets us to a net Ethereum rate of return if you just are staking 17.6 net ETH of 5.15%. I've been told that this is definitely low. When we look at our staking returns, we're seeing a net of around 6.5% to 7% when that includes MEV rewards and the increase in RPL to ETH terms, but we're set the low expectation in the guide for others. So the last part of this, is jumping into, if you've already determined, do you like Rocket Pool, what are the different ways that, you might want to stake with Rocket Pool? So what's available today is 16 ETH and 1.6 ETH of RPL, but soon we're going to be able to have what are called LEBs, which are lower ETH bonded mini pools or validators. We only need 8 ETH and 2.4 ETH of RPL. So then we break down this model for how you would be able to get those net returns into ETH. And so once again, we took the current rate of return that was available at that date. And I know that's decreased, but you can update this yourself. It's manually been updated. You also update the price of RPL to ETH. This has gone up. It's about 25.8 as we saw. So we'll just update one example. And then you would take your total. Yeah, sorry, I almost got rid of something there. Didn't need to do that. So again, we're taking the rewards from below, and that would be your ETH denominated rewards. And then also your RPL rewards. Now, the third option that we wanted to highlight with RPL is on the LEB side. And the key here is that you're going to be earning more rewards with the staking LEBs. Sorry, I was in the wrong section of the guide. I even get confused myself. I was again looking up here at the guide and updating a price when really we're talking about being down here in the LEBs scenario 2B. So enjoy this document however you may like, but the key piece here is that doing the upgrade with only 8 ETH, you are able to get higher Ethereum denominated returns because of the analysis that the Rocket Pool team has done, and you can do yourself. You can see that with the LEB pools, there's actually more RETH created on the open market, and you're able to get a higher interest from the liquid staking tokens that you are creating for others to use. And then also your 8 ETH will be able to earn similar rewards as it did with 16 ETH as a node operator. So the net is an increase in your Ethereum denominated returns by having, first off, more net returns by the liquid staking tokens that you have provided, as well as in your increased RPL to ETH rewards because you have to have more RPL down as collateral. So we've got all of our references that we highlight down here below. We hope you use them and you like them. And then lastly, because we thought this model was so good, we want to shout out to Marceau for using this, comparing Ethereum liquid staking tokens or derivatives. And so going from one side of purely centralized to purely decentralized, where do different projects fit? You can see that Rocket Pool has a unique position here where it's truly all green because it is also trustless. Solo staking is fully trustless. You're just operating yourself with the smart contracts and the beacon chain. Whereas with Rocket Pool, you're operating with smart contracts that operate with the beacon chain. So you're getting there, but you're also operating with the Rocket Pool protocol. But it does have, a limited security circle trust. So there is a small group that helps maintain the Rocket Pool protocol. And so there is some trust, but it's very limited. It's fully permissionless, allows node operators, allows self-custody. It has no censorship. And so limited regulatory issues when it's fully permissionless. There's limited rent seeking or ways that you can extract value. The RPL token, it's just there to provide collateral. It's a utility token for the ecosystem, and they provide liquid staking tokens, which a node operator does not supply. So when we're looking for ways that decentralized finance will actually be impactful in the real world, and that will be by being able to have a bond that then is also able to be leveraged or get additional yield on, as you sit on your bond, and that is fake ETH or ultrasound money. So we're really excited about that and what Rocket Pool and our ETH brings to the market. We hope you really love our model. And lastly, shout out to the Common Stacks. This is where the hat comes from, and learned a lot from them on how to realign incentives around public goods, and we see Rocket Pool doing that. And so just really grateful to be in the community. Hopefully you like this video. Let us know if you have any comments. Thanks.